Local index remains under pressure this morning while the rand fights to win back lost gain. The JSE extended losses on Wednesday as inflation risks and prospects of more interest rate hikes by the Federal Reserve and other central banks in developed economies weighed on sentiment. Now, Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela, joins us now for a wrap of the latest market news. Makwe, very good morning to you. Thank you so much for your time. Perhaps let's start off with an overview of how the markets are faring so far today after the JSE extended losses in the previous session.
We continue to trade in the negative, maintaining the disappointments that we've seen since the beginning of September, and all because markets are starting to realize that we might be having these interest rates with us for much longer than we anticipated. As we've seen that we've got worries about the growth when it comes to China. We've been having the latest worries when it comes to oil prices as they continue to be high, and in their nature that will be inflationary. Then that tells you that the Reserve Bank or central banks might not have to decrease their interest rates. And also we've seen that the stronger dollar itself, and we know it has been benefiting from worries about the Chinese economy, from higher treasury yields, and also the U.S. economy showing some resilience compared to other economies. So people seeing the U.S. dollar more of a safe haven, and when that happens, it makes whatever we get to import becomes very expensive because most of those stuff gets to be priced in U.S. dollars. So markets are just more worried about the outlook going forward. And yeah, so far markets for the month of September, the JSE itself is down almost 0.6%.
Now, South Africa's foreign exchange rate reserves edged lower in August 2023. Talk us through this data and its significance.
You know, that's not a good sign. Remember, this can be used more as a way of self-insuring yourself, especially for poorer countries. And it also helps to deal or ensure the supply shocks and also complement monetary policy in a way of trying to help when it comes to price and financial stability. And that gets to be attractive when it comes to foreign investors. The minute you continue to have very decent, or you always continue to indicate that at least your reserves are growing, because all it says you'll be able to meet your financial commitments going forward.
Sanlam has published interim results for the 6 months ended in 30 June of this year. How have they performed in the period under review?
Very well, and I think we know that the guys, number one, we've been having an environment where consumers were struggling because of elevated inflation and high interest rates. But hey, they've made good money. Number one, they've seen, or they had a favorable claim when it comes to life insurance. They've also managed to benefit from performing equity markets. Also, their credit business in India did well, and also some general improvements when it comes to the general insurance. And we know, as we said, consumers have been struggling, but the guys at this now, they've managed to see new business volume growth going up by 19%. Yes, that also includes the inclusion of the asset management business, and their profits as headline earnings per share have been going up by almost 118%, but we have seen that there have been some cash outflows, especially when it comes to savings products in South Africa, and indication that South African consumers continue to struggle, hence they continue to tap into their savings.
And lastly, Pick n Pay founder Raymond Ackerman has died at the age of 92. Let's perhaps go speak about his legacy and contribution to the retail sector and business as we know it.
You know, this is the guy who's been pushing for lower prices. And I think those who have done business economies will know that this is one of the case studies that we also used to do at school. Because what Pick n Pay used to do, they will take whatever from the suppliers, then pay them after 60 months. All that tells you that they are trading with your money as a supplier, so they don't expose themselves that much. And that's why maybe the guys could afford to offer low prices, because they didn't have to incur those costs. And yes, maybe others don't know that this is the guy that when they got Ackermans to be bought out by Greatermans, their competitor, the guy was involved in launching Checkers itself, up until Checkers fired him, all because he wanted to continue to offer lower prices. Then that's when he went out and started Pick n Pay.
Wow, thank you so much, Makwe. Let's perhaps leave it there for now. Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela.